When we take a look at Work Together 2-3, our instructions look very similar to what we did in 2-2. And in fact, in 2-2, it told you that we are going to be going through and using some of these accounts just in 2-3 that we can ignore. And when I look at the directions that pop up here at the very top, there are certain accounts that we really truly just ignored in 2-2. They gave them to you for you to start thinking about them, but the ones that we're going to be using specifically in 2-3 are going to be the Kathy Burgum drawing, sales, advertising expense, and rent expense. Okay. You will also notice when we look at the transactions, April 10th to the 20th, it is not the beginning of the month because this is a continuation of the problem that we did yesterday. We have T accounts are given, and I'm going to guide you to the following examples using the chart of accounts for our business Burgum services below. We have to prepare 2 T accounts for each transaction. On each T account, write the account title of one of the accounts affected by the transaction, and write the debit and credit amount in each T account to show how the transaction is affected. Just like yesterday, we have to put the debit first. If you put the credit first, it will be wrong. Okay? So, April 10th, transaction reads, receive cash from sales. Okay? First thing you have to do when you read a transaction is you have to determine your 2 accounts that are being affected. The 2 accounts that are being affected are going to be what, Dylan? Yep. And, okay, the account is sales. So when we look here, basically what we have to do is we have to pick from any of these words up here. Those are always going to be our accounts that we can choose from. Anytime in accounting, they're always going to give you the list of accounts to work from. A business will always spend time at the beginning when they first start up to determine what accounts they're going to use. So we have, Dylan said we're going to be affecting cash and sales. Well, Dylan, we're going to do the hard one, not the easy one, because we learned some stuff today that we have to be able to apply. So the new account that we learned about today is going to be sales, okay? So the account title is sales, Dylan. What is the classification for sales? Revenue. How do we determine revenue's normal balance? By the side of the equation or how it affects owner's equity? Try the other one. How it affects owner's equity. Remember, assets, liabilities, and owner's equity are going to be the only one that we use for determining by the side of the equation, okay? So revenue, we're going to determine its normal balance by what it does to owner's equity, okay? So what does revenue do to owner's equity? Increases. What is the increase side of owner's equity? Right, which is called credit. So the normal balance then for sales is going to be a credit. So I had to go through and think about all of that before I did anything on this assignment. So now, Dylan, do we have more sales or less sales because of this transaction? More sales. So therefore, sales is going to be increasing. Will it be debited or credited? Credited. So it has to be the second one. So sales is going to be credited $600. Cash is going to be debited $600. Just for fun, Philip, what is the classification of cash? Normal balance? Debit. I skipped a question, didn't I? Because I said classification and then I said normal balance. What's the question that comes in between there? Side of the equation, because you should automatically think, oh, assets left, therefore debit. So I eventually stop asking every question and I just say classification, normal balance. Okay? And because cash is an asset, it has a debit normal balance, we have more cash instead of less cash, so that's why we're debiting it. April 11th, sold services and account to Sam Erickson, $850. Marcus, what are my 2 accounts? The next one's tricky. I would agree. We got accounts receivable, Sam's Erickson. What's the first word of the transaction, Marcus? Sold. So remember when I said we have 2 words are always going to relate to one classification? I wrote it on the board for last chapter that we've seen in a transaction. Do you remember? If not, that's okay. That's why I'm here to help. Sales and sold go together. So what do you think your account would be then with that, Marcus? Sales, exactly. So anytime we see the word sales or sold, we know that our account that's going to be affected is going to be sales. Okay, so we're going to do accounts receivable Sam's Erickson on this one just because we just did sales, Marcus. So accounts receivable Sam Erickson, what is the classification? Asset, liability, owner's equity, revenue, expense, or withdrawal. Asset. Side of the equation, normal balance. Okay, left debit, right credit. So we said left debit balance. Now my question, does Sam Erickson have to pay us more money or less money? Are we going to receive more money or less money from Sam? More. So therefore, Sam Erickson is going to be increasing. He is an asset, so we're going to debit that one. So that one's going to go first for $850. The other account that you said that's being affected is sales. Sales is a revenue account. We determine revenue account's normal balance by determining how it affects owner's equity. Revenue increases owner's equity. The increased side of owner's equity is a credit, so therefore owner's equity, or excuse me, sales is going to be credited $850. The other thing is we figured out the debit, so we know the other account's going to be credited. Does that make sense? So that's why I went faster on the second one. April 14th, paid cash for rent. Lucas, what are my two accounts? Rent expense. I really like to hear the word expense of that because that gives us a clue on our classification. So we're going to pick the one that we haven't done before, Lucas. That's going to be rent expense. Can you please tell me the classification of rent expense? Asset, liability, owner's equity, revenue, expense, or withdrawal. Close. What is the last word of your account title? Expense. So the classification would need to be expense. Okay. We got to remember that that's a new classification. We added those three new ones: revenue, expense, and withdrawal. So rent expense is going to be an expense. And because of that, Lucas, we know, I wrote over here on the left-hand side, expenses are going to, we're going to determine the normal balance by how it affects owner's equity. And how does expenses affect owner's equity, Lucas? I'm sorry, I just didn't hear you. Yes, the decrease. So when I think about owner's equity, Lucas, we know that owner's equity is on the right-hand side over here on my board. What is the decrease side of owner's equity? Yes, you're right. So that is the normal balance of an expense. So that's like, you got to think about, okay, I'm going over here, but it's a decrease, so its normal balance is now a debit. So debit. Now the other thing is, you are never going to credit an expense. This month I pay rent, $500. Guess what I do next month? I pay rent. And then I pay the next month. Is rent ever going to go down? As I pay my expense, the value is going to go up and up and up. And that's what's going to happen to all of your expenses, because then at the end of your year, when you determine if you made money or lost money, you can say, this is how much I've spent in it. So 99.9% of the time, you are never going to credit an expense. It'll always be increasing your expense. The only time you would credit it would be if you made a mistake and put it into rent expense instead of repair. And you have to get it out to get it into the right one. Okay. So rent expense. So we know that I just said that you're never going to decrease an expense, so we are going to have rent expense being debited for $250. And the other account that we said was what, Lucas? Because that was so long ago. Cash. And cash is an asset. Assets are on the left side of the accounting equation as a debit normal balance. And we have less cash, so therefore I need to credit cash $250. 18th. Receive cash and account from Sam Erickson. Alyssa, what are my two accounts?
You have cash and accounts receivable of Sam Erickson.
Excellent. Which account should we work on first? Well, you can pick it. Cash. What is the classification of cash?
Asset.
Normal balance.
Debit.
Okay, do we have more cash or less cash?
More.
So therefore, the increased side of cash will be a debit, so cash would need to go first. Thank you. So I have more cash for $425. Now, accounts receivable Sam Erickson is what type of an account? We talked about it on the 11th. Do you remember, Alyssa?
Oh,
Accounts receivable, Sam Erickson. Asset. Now, this is where people get confused because accounts receivable, am I going to receive more or less money from Sam Erickson because of this? Okay, so it is going down. The amount that I need to receive from him is going down. So I'm decreasing accounts receivable Sam Erickson $425 because eventually, once he pays us all off, his balance should be zero. The 20th, paid cash to owner for personal use. Abby, what are my two accounts? Correct. Good job on using drawing instead of capital. That's awesome. So let's go ahead and the one that we're going to pick from there is going to be Kathy Burgum Drawing. What is the classification of Kathy Burgum Drawing? Revenue, expense, owner's equity, drawing or withdrawal, revenue, or expense? Withdrawal. And how do we determine the normal balance of withdrawals? How it does to owner's equity. And what does drawing do to owner's equity? What does it make it do, up or down? Down. And what is the decrease side of owner's equity? The left side is a debit, okay? So we know that drawing has a debit normal balance, and we're always going to keep adding to the value of drawing. We're never going to decrease drawing. So therefore, the value of drawing is going to be going up. So we're going to be debiting Kathy Burgum Drawing for $300. And the other account that's being affected is cash, and that's being credited $300. And when I take a look at that, I should have all green circles. You will notice after you're done with your work together on your own, I have turned on a couple other assignments for you. On Monday, before class starts, you have application 2-3 due. That's due at 11:30. I know that class starts a little bit before that, but do not save time 6 minutes at the beginning to finish that. Okay, so have that done before class. And then you have due at noon on Monday is 2-4. And here's the reason why I have one due before class and one due at noon. They're basically the same type of an assignment. And if I have them do at the same time, if you make the same mistake on one and the other, you're going to get them both marked wrong. So you can work on them both, and then Monday when you get to class, right when you at 11:30, you'll be able to see your grade. And if you need to, you can make changes then on 2-4. But it will be due Monday at noon. You will have some class time to work on because I am done teaching the book at this time. Also due Tuesday halfway through the hour is going to be 2 study guides, so that can be something else you can work on. Okay? So just giving you a heads up, those assignments are there and available for you.